Good evening, everybody. Thank you for joining the Colorado Sun for one of our many free events. Tonight's event is Climate Change Hits Home, and we have a great panel with us tonight of experts from Colorado and from around the country to help us discuss this. We have a theory at the Sun. We're not alone in this theory and observation that in aspects of climate change and people noticing climate change, talking about climate change, sometimes there's a big policy picture to it where we don't know what impacts it's actually going to have on our daily lives. We see the temperature heat up on a certain day. We don't know if it's linked to climate change. And so what we've been talking about a lot is that insurance premiums are one of the first places for the average consumer that climate change and extreme weather events piling up under climate change are starting to hit home for them. In Colorado, obviously, we are still in the middle, on the edge of hail season, where we all have to run out our door at 4:30 in the afternoon and make a choice between covering up our tomatoes or covering up the least bad car in the family with a blanket from the next hailstorm that's coming. Those events are becoming hundreds of $1 million events on a regular basis in Colorado. And of course, with wildfires happening, there's one going on in New Mexico right now that's threatening a lot of structures and are destroyed some structures. We've had our Marshall Fire. We've had any number of wildfires throughout the mountains. That is raising premiums for people. In some places, causing insurance companies to say, we can't afford to insure people in this area anymore, or we need to raise your premiums by quite a bit. The insurance companies obviously are the targets of a lot of consumer anger, or at least consumer questions, but they are able to prove that they are losing huge amounts of money on this. Carole Walker is with us tonight. She's going to talk about the problems of reinsurance and the fact that the insurance companies can't get insurance as often anymore to back up all the claims that they are getting from these extreme weather events. So we're here to talk about that today, to talk about what is the impact on the consumer, what are we seeing on the ground, what can be done about it from a state level, what the insurance companies are doing about it to try to help out consumers. And we have a great panel of guests. First, we want to thank our sponsor, AAA, and remind everybody who's watching tonight that the Sun is a member of the Trust Project with a commitment to great journalism and ethical journalism. And you can read more about that at coloradosun.com/ethics. Our panel tonight, starting with Mike Conway, who is the insurance commissioner for the state of Colorado, obviously has had huge experience with the Marshall Fire, any number of other fires, hail events. We won't talk to him tonight about health insurance so much, but obviously he's deeply involved in that with my partner, John Ingold, on any number of stories. And we welcome his presence and his time. Thank you, Mike. We also have Carole Walker from the Rocky Mountain Insurance Information Association. And she not only has to cover Colorado for the insurance industry, but as she mentioned, also covers New Mexico and is dealing with a lot in the last month in the New Mexico wildfires. And obviously that's a daily event in our region, unfortunately, once the summer starts. We also have with us Doug Heller, who is the insurance representative and expert for the Consumer Federation of America and has talked about these questions on any number of forums. So thank you, Doug, for joining us with your presence. Let's start off by describing the problem in a kind of a basic way. We've got a couple of statistics here that I'll mention. First, from All Those Follies Denver Post story, that Colorado homeowners are reporting premium increases ranging from roughly 30% to more than 130% in just the past few years. And we have had one of the biggest cumulative changes in rates from 2018 to 2023, including a 57.9% jump during that 5-year time period in our state, just behind Texas at just under 60%. Arizona was third with a 52.9% increase. We have another Denver Post story talking about 330,000 homes in Colorado with moderate to severe risk of wildfire damage. And that puts us pretty close behind California, obviously much higher population, 35 million people in California, but we have a large number of structures in that wildland urban interface area. Doug knows a lot about California, is going to talk about the problems that they're facing there, how it compares to Colorado. So, Mike, can we start with you to talk a little bit about, is this a fair premise that climate change, more extreme weather events are having an impact on people's homeowners insurance, their car insurance in Colorado, and how are you tracking that?
Yeah, thanks, Mike. Thanks to the Colorado Sun for having us here today and for having the discussion. Yes, I mean, I think it's obviously a fair premise, right? You see it in the insurance rates that people are paying for their auto insurance and their homeowners insurance. when you look at our homeowners insurance market, those insurance premiums are increasing because insurance companies, to your point from before, Mike, are losing money. 8 of the last 11 years, insurance companies in mass, on average, and the homeowners insurance market have had years where they've simply lost money. And that's why you're seeing the premiums increase. And that's a reflection of climate change. That's a reflection of the fact that we're a state that has really 2 catastrophes that hit us on a regular basis. We have hail, and we have wildfire. And I think folks don't realize how big of an impact hail has on our state, right? So it's not a coincidence, Mike, that as you mentioned, that we're right behind Texas. Texas, the only catastrophe that we don't have that hits Texas is obviously hurricanes. That's why they're first and we're second. But we have wildfires and hail, and they have a lot of wildfires and they have a lot of hail. But so every time we see a big hailstorm come through, we've had a number of them come through already this year in Colorado that have really had huge impacts up in the northwest part of the state, or excuse me, the northeast part of the state, and even into the metro area as well. And it's not the case anymore that the hail season is over once we get to June or July. The hail season really does persist throughout the summer. And it's similar with wildfire. I heard a report earlier today talking about wildfire, and that the wildfire season in Colorado, this one reporter was having a discussion saying that the wildfire season is typically over in August and September. That's not the case anymore, right? The wildfire season goes into the fall, and obviously, as we saw with the Marshall Fire, it goes into the winter in Colorado now. So all of those things have an impact, right? And it's wrapping our arms around those impacts and finding the best way to be innovative in responding to them, right? The one thing that I know and that I am confident that we will achieve in Colorado, and maybe we're going to lead the way for the country, is we're going to find innovative solutions to tackle the premium problems that persist because of climate change. That's going to be, I think, multifaceted, Mike. We're going to talk about those things, I think, throughout today. But I want to start with that message, folks, that we're going to find solutions to these problems. We're going to find solutions to and bring premium relief to the market. We have to find those. And that's what's going to be important going forward.
So again, it's staying at the base level because we are going to talk about those things throughout the course of the hour. But are you fielding more consumer complaints, queries, questions of what to do if they see a 50% jump in their premium or 100% jump, or especially in the cases of HOAs, which we'll talk about more, they're getting just not offered insurance for the next year altogether?
So it hasn't been the case on the HOA front that we've gotten significant complaints about availability issues. We've absolutely gotten complaints about affordability issues through the HOA space and the single family home space as well. So as a general matter, right, what we tell folks to do is to make sure that they're shopping around, contact their insurance agent, see what other options that there are that are available out there. At the same time, though, we have to be cognizant that these challenges are hitting people very, very hard, and we have to find solutions to those challenges. And that's, like I said before, Mike, that's where the conversation has to go. We can't, I don't think we're in a sustainable place now where we see these rising insurance premiums, the numbers that you shared from before, are continuing. We have to find ways to start to bend that curve.
Carole, how does the industry talk about the broader trend, the curve of climate change events, more extreme weather events? At the same time, you're dealing with these huge individual billion-dollar, multi-billion-dollar events that you have to deal with on the ground. What is the thinking among the Rocky Mountain insurers about what's going to be happening in the next 10 to 20 years?
Thanks, Mike. And again, thank you for inviting us to join you tonight. We know these are very real dinner table issues for folks, and there's a lot of fear associated with if you can't get insurance, you can't get a mortgage. And, how when I'm balancing increasing property taxes versus how to pay groceries and now higher insurance premiums, we know people are really grappling with that. And while it's a cliche, we really are in a perfect storm when it comes to these property challenges. First and foremost, they're life safety issues. I do cover New Mexico, and we have 8,000 people evacuated in the village of Ruidoso, and we know hundreds of structures that have burned, and 2 deaths. So first and foremost, we have to look at ways to reduce risk, and that we hope will also have an impact on the solutions the commissioner is speaking about on getting back to a stable insurance market. While we do have that perfect storm of rising catastrophes. We had more billion-dollar catastrophes in the United States last year than any year in our history. Here in Colorado, one estimate puts it that over the last 10 years, Colorado was second after Kansas to see an increase of 275% just in the occurrence of those catastrophes. So at the same time, while we're seeing an increase in catastrophes, we've always been Hail Alley in Colorado, ranked second in the nation after Texas in hail insurance claims, ranked second for wildfire risk. Those are impactful, but we have more people in the path of those, more cars, more homes. And at the same time, the insurance industry is experiencing the market conditions that everyone is in their household is record-breaking inflation. Everything that insurance pays for property is going up in cost, from lumber to glass to labor shortages. These are all things that the insurance industry is looking at in the cost to repair and rebuild. And then at the same time, the insurance that insurance companies purchase, we call it reinsurance, to cover them for big catastrophic billion-dollar events. We're seeing that go up at record-breaking paces. So what many insurance companies are, I think that there's this fear that there's an exodus of insurance companies. We're seeing a big impact on that in California. In Colorado, what we're seeing right now at this tipping point, we don't want to end up where California is right now, and I know they're working hard to reform and fix some of the things there, is insurance companies limiting their capacity. So what they're doing is, unlike a retail store where you're trying to sell more sweaters, insurance companies are trying to balance this increased risk, increased cost of claims with the number of policies they're able to take on. So that's where you see some of, especially the major companies who have a lot of risk, writing fewer policies or even non-renewing in really high-risk wildfire areas. So we know these are tough challenges. I stand there with the insurance commissioner. We talk all the time. It feels like, they've hosted affordability and availability stakeholder meetings that we've participated with. So we don't think that this is hopeless. We think there are real solutions. The problem is there's not just a silver bullet. These have to be multi-pronged solutions, from mitigation, reducing the overall risk, and then looking at how can we keep private insurance in the marketplace. And even, I know that you wanted to speak about this later in the program, creating an insurer of last resort that Colorado's never had before. So I think that we're trying to get there. We're not there yet, but these types of dialogues help us move down that path.
Okay, well, let me ask you just a quick question, because I have this question myself, and I'm sure some of our listeners do as well. When you talk about insurers limiting the number of policies or limiting their exposure, what is the legal mechanism nationally or in Colorado if State Farm, Allstate, whoever we're talking about, says we're exposed to too much risk in Jefferson County? Are they allowed to say we're not going to write any new policies anywhere in the county? Or what limitations are on them? And Mike, obviously, feel free to jump in there. What are the restrictions? What protects the consumer to make sure that they will get insurance next time?
So that is a good question. And understand, as insurance companies are doing that, they're trying to protect their larger base of insurers. So as they insure, tens of thousands of hundreds of thousands of people in Colorado, they need to make sure that they're going to be able to pay out claims for everyone in the state, from the Eastern Plains to the Western Slope to the higher risk wildfire areas. So when there are pockets what are determined very high risk, and I would bow to the commissioner on this because he does regulate this and monitors this very, very closely in this current environment, is they really have to justify where they are limiting that risk on an individual property basis. It can't be on a wholesale basis. So I would let the commissioner speak to that more. But really, this is one way the insurance companies are really trying to stay in the marketplace, understanding from a reinsurance perspective, from a claims paying perspective, they may have to limit the amount of risk that they take on.
Yeah, Mike. So there aren't any legal requirements in place to keep insurance companies writing in any particular part of the state or the country, for that matter. But that goes to some degree to what Carole was talking about before, that we have to find ways to incentivize insurance companies to stay in our market and to be more competitive throughout the state. And I do think that there are potential ways for us to go about doing that. We can certainly have conversations about loosening up regulatory components that would encourage insurance companies to expand into greater parts of the state. I think there's all sorts of different parts of the conversation that can come into play. We can encourage mitigation to the point that Carole made from before in ways that actually make sense, and we can ensure that consumers actually have an ability to know that the mitigation that they're doing and the investment that they're putting into mitigation is actually going to have an impact on availability. But that's exactly, though, why we created the FAIR Plan, right? Why we ran the legislation a year and a half ago for that insurer of last resort. Because we were concerned that we very well could find ourselves in a place at some point in the future where we had pockets of the state where insurance companies didn't want to write business for some period of time. And I think that's the key, Mike, and that's the way that we're thinking about it at the division, right? We're thinking about this insurer of last resort as a pressure relief valve for the market to adapt to climate change, and then find ways for us to work together and be innovative in order to bring more competition into the market in a whole host of different ways. But that's why the FAIR Plan is going to exist. That's why we're standing it up. That's why we're doing all of the work in order to make sure that if that does happen, if we have a situation in Colorado where we have availability issues from the private insurance market, we have a backup mechanism in the state. We're the first state in 30 to 40 years, depending on which metric you look at, to create a FAIR Plan, Mike. And we did that very intentionally because we wanted to be ready for the potential issues that we may be facing in the future.
All right, well, we'll talk about FAIR Plan next because everybody wants to go there, and I'm sure our listeners do too. But first, you have to ask Doug. Doug, thanks for sitting on your hands during that introduction. What's on top of your mind in talking about what you're hearing from consumers around the country about high cost of insurance and rising costs, and realizing that as climate change gets worse, that they're going to see more of it? What are people talking about the most?
Well, people are talking about just the inability to afford the coverage, which for a lot of people starts to feel like the inability to afford home ownership. And we're seeing around the country this dramatic number of uninsured homes, as well as this growing problem that's hollowing out of coverage. So the insurance that people are able to afford covers less than it used to. We're seeing higher deductibles. We're seeing the structure of claims payments change so that instead of getting a full coverage, if you have real damage, you're going to get a depreciation effect imposed on what you get paid. So you won't be able to have enough money to rebuild the house as it was. You'd have to put in more than you used to because the new structure of the policies. So either homes are becoming underinsured, or for too many people uninsured. We just at Consumer Federation of America did an analysis of Census Bureau data that shows that about 6 million American homes are uninsured, representing something around $1.6 trillion in market value. That's extremely concerning. And that data are from 2021. Our expectation is that when the 2023 data come out later this year, we're going to see even more uninsured homes. And of course, uninsured homes in Colorado, in Florida, in California, all around the country, that leads to the real systemic concern that our housing market could be in real trouble. If we start seeing disasters destroy homes or do serious damage to homes when there is no more insurance, or there's not enough insurance to rebuild, not only does that leave people to have to move, it creates blight in communities that can really have this ripple effect. People understand that. They're concerned about that. But also, I think they're really kind of shocked by the whiplash of what's happened. And this is something that I think just from this earlier discussion that I think is really important to recognize. Although there seems to be, for various reasons, including the heat waves that we've seen just this early summer alone, but just the number of storms and wildfires and hail that seems to be piling up, there is clear recognition that climate change, like kind of across the board, climate change is doing much more damage than I think we had collectively accepted in years past. But it's not new. And in fact, the insurance industry and regulators have been asked for decades now to pay more attention to the impact of climate change on insurability, on the property insurance markets, how it's going to affect our homes. And for years, unfortunately, the industry and too many regulators, Commissioner Conway, not one of them, but too many regulators had their head in the sand and allowed things to just kind of go on as usual. So when somebody in Jefferson County suddenly hears that they're being non-renewed, they ask themselves, wait a second, Last year, the insurance company didn't say there was any problem. They took my premium, and as they did the year before and for decades before that. Climate change didn't happen in 2023, but the insurance companies have really just switched direction. And I agree with Carole. The impact of the unregulated global reinsurance market is having devastating effects on our domestic insurance market. But the fact that we've had this sudden change in behavior from the insurance industries doesn't reflect the real change that we've been seeing for decades. And I think that really points to something that Mike said about trying to build this transition of adaptation with the FAIR plan, but also we need to think about a better transition for those homeowners who just suddenly are told, sorry, you're uninsurable, or you've got to have a higher deductible, or we're going to jack up your rates so much. There was no transition for consumers who over the last kind of year and a half have been facing this being pilloried by high insurance rates and sudden non-renewals in Colorado, but also around the country. So I just think that there is that larger context that we have to remember, that consumers have been paying premiums because the insurance companies have said, no problem, we'll sell you a policy for years and years. And I just wish that we were thinking a little bit about how do we transition into this rather than how do we make consumers bear this pain immediately and then hope we can figure it out down the line.
Carole, do you want to jump in and talk about, could insurance companies be doing a better job communicating with their customers in between the times when they have to raise the premiums or, God forbid, make a cancellation notice about how things are going, the risks that they're facing, the costs that they're facing, and bringing them more into the bringing consumers more into the discussion before the premium notice comes due?
And I believe that insurance companies communicate very regularly and with their insureds. Also, my sole job is helping people understand their insurance, whether that's a consumer or a regulator or a legislator or any of the many groups that I'm representative on that are coalition partners. So I think that the communication is there. Insurance companies are also one of the most heavily regulated industries out there. So there's a requirement for communication before a non-renewal, before a cancellation. I think what Doug's alluding to is that there should have been a longer runway up to premiums increasing as well. The challenge is we are seeing a dramatic increase, and it is exponential, and it's happening in real time in catastrophes and what we're experiencing in the marketplace at the same time with costs. And if you don't have insurance companies keeping pace with that, and I realize that it used to be, Commissioner Conway knows this, would get one rate increase filed over a year for a company or every 2 years. We're in a situation now where insurance companies are trying to play catch up. And I get that. But at the same time, if they don't, what we face is insolvency. And we've seen that play out in other states. So even in Colorado, unfortunately, I do think we are having to adjust in the long term to higher premiums. Not as high as the rest of the country, but unfortunately, that's why we're seeing them rise at a higher pace because they were underinflated. So I don't know where we go now, where the environment is changing so much as the insurance companies are looking at the modeling. They're looking at the increased risk. They're looking at the increased population, the increased costs associated with that. If we don't allow insurance companies to keep pace with those increases, that's when you have a situation like in California, where they actually had laws on the books that didn't allow insurance companies to respond to that real-time increase in costs and catastrophes. And they had a prior approval process. There was a huge lag time when they were able to implement rate increases. And as much as none of us want a rate increase, you don't want to have a claim. And now in this environment, there's a bigger chance you're going to have a claim, whether that's a hail claim, a wildfire claim, just an individual water damage claim, where your insurance company might not be able to pay that out. So I realize that we're all in a situation, but I also think that placing blame on one entity over this or just looking to the insurance company for all the answers, that's what the situation we're in. We really have to look at this at a broader perspective in responding to the increased volatile catastrophe environment we're in, the volatile marketplace, and understand insurers are in the risk business. And we have to let that function adequately and perform how it needs to.
Doug, I know you want to jump in from a California perspective
Yeah,
on
just
what.
very briefly. I've been working. I work around the country on these insurance issues, but I'm based in California, and I've been working on in the regulatory environment here in California for over 25 years. And I just want to correct something that Carole said, because it's a misunderstanding that we see around the country. At the top of this conversation, Mike mentioned that in Colorado, the home insurance markets have been unprofitable for something like 8 of the last 11 years, and I think that's accurate. California, for all that we've heard about how problematic the market is and the regulatory environment, California, in that same study, has been unprofitable for 2 of the 11 years, and in fact, since 2019. Including that 2019, California's home insurance market has been one of the most profitable in the country for insurers. That's data from the National Association of Insurance Commissioners. We had terrible fires in 2017 and 2018, largely caused by utility companies, which ended up paying about $12 billion back to the insurance companies. But we did have those terrible fires that made for very bad years for the insurance companies. But the regulatory environment in California has not only protected consumers who have much lower home insurance premiums than in Colorado, but has been better for the insurance companies than they've been letting on. But they don't like the regulatory system, and they don't like the rules that don't let them pass through every last dollar onto their homeowners. And so they've been really playing, I think, a kind of a bully ball here in California in an effort to just loosen regulations, loosen oversight, so they can do in California what they've been managing to do in a lot of other states. And so I just want to be very clear. California has actually been quite a profitable market for home insurance because the regulatory environment, though having consumer protection rules, has allowed companies to raise rates when needed, and they were needed. And we have invested here in California, as Colorado is doing, billions of dollars in wildfire prevention. So we've actually been largely catastrophe-free. And, you never know, but largely catastrophe-free when it comes to wildfires since 2000 and since the bad 2018 fires. So I just want to correct the record a little bit. Yes, the insurance industry has been really tough on California, and it has been very painful for homeowners, but it's not because of fundamental flaws in the system. It's because of an engagement, a kind of a regulatory bullying that we're seeing from the industry that just want to get more out of this market.
So
Mike, Carole, I know you've got plenty to do without having to speak for California all of the time. But before we start talking about the FAIR Act, do you want to mention anything else, any response to what Doug said?
Yeah, I don't want to cut off the commissioner, and I don't need to go in depth, but the industry does disagree and has gone on record of disagreeing that there are man-made catastrophes through the regulatory and political environment that are putting additional pressure, that the FAIR plan there is not functioning the way it needs to, and there's a lack of confidence by the industry in California that is pushing them out. And so that is the reality of it. So I'm not here to defend or not defend, but it is a very real issue. And I know the industry in California is working closely with Commissioner Lara on some reforms that are bringing confidence back into the market. And at the end of the day, we need a competitive, stable insurance market in these tumultuous times.
Okay, well, let's go to the topic a few of us have mentioned, but I think their readers, listeners want to hear a lot more about, which is the idea of an insurer of last resort. As more and more states have to consider that because of the catastrophes that they have faced. Some states have already done it. We've heard a lot about Florida, where, as I understand it, the state is now, if not the largest, one of the largest insurers in the state of Florida because of hurricane costs and the fact that so many insurers just can't afford to do that anymore. Mike, if you could introduce what Colorado has done, understanding that there may be some skepticism both in me and in our audience who have dealt with this in healthcare. When we've had healthcare insurers of last resort, when people couldn't afford a healthcare policy, those don't always turn out that well because of the pool of people, the pool of risk that ends up in that group. So let's make sure we talk about the distinction, how we design Colorado's property insurance in a way that's different from what people may have heard about health insurance. But if you could start by talking about what is Colorado doing to create an insurer of last resort, and where are we in that process?
Yeah, happy to. And I think it's important that we do focus the conversation on Colorado, what's happening in Colorado and the steps that we're taking. There's a number of different things that are happening throughout the market that are impacting states universally. some of the things that we've touched on, but the issues that different states are challenged with aren't necessarily happening in Colorado. So I don't want to spend time talking about those types of things. But the FAIR Plan. Let's talk about the FAIR Plan. And it's a fair point, Mike, the analogy to high-risk programs in the health insurance space. And to some degree, there are similarities between the two, right? The reason why you need an insurer of last resort for a homeowner's insurance market is because you have pockets of the state where you don't have the private market willing to write business any longer. We aren't when we passed the FAIR Plan back in 2023. We weren't at that place. We didn't have pockets of the state where we had availability issues, and that's how we refer to them just in general parlance in Colorado. But we were very worried that because of the rising costs of reinsurance that the insurance companies were dealing with, and on top of that. Carole touched on this a little bit, but I think it's going to be really important for us to flesh this out a little bit more, Mike. But the uncertainty that modeling and the modeling that insurance companies, and in particular third-party modeling firms, with the uncertainty that those models were showing insurers about the future of catastrophes, it very well could lead to insurance companies in certain parts of the state not wanting to write business. So we got prepared. Right? That's fundamentally what we were doing. We were being prepared for a kind of a worst case scenario where we would have availability issues in the state. But it really is exactly what I said before. We designed the FAIR Plan so that it would be a pressure relief valve, so that if you do have, whether it's someplace in Jefferson County or around Pueblo or around Boulder, where we have availability issues, we have time and we have a safety net for people to go to. So where we can then adapt to the challenges that are happening in the state and encourage more competition in the state. And that's where we're at right now, Mike. So the FAIR Plan will be up and running. Carole sits on the FAIR Plan board. We're pushing the FAIR Plan board to have products available January 1st, 2025, which is a huge lift for folks, right? So they're standing up a new insurance company. Right, all intents and purposes, the board is standing up a new insurance company. So the idea that they're going to get that done essentially a year and a half after the bill became law is a huge lift. But we've been pushing them to do that, and we're confident that they're going to hit that mark. But it can't be something that we don't want people to go into the FAIR Plan and stay there forever. We want more competition throughout the state, and that's where we're spending a lot of time. Carole touched on the stakeholder meetings that we've been having. We had stakeholder meetings last fall. We're continuing them this summer into the fall about, and just to have conversations with the industry, with stakeholders, with advocacy organizations like Doug's, about what are the ideas out there that people think that we should be investigating to bring more competition into our marketplace. How can we encourage these insurers to write throughout Colorado? What are the levers that we have to pull now? What are the levers that we should create in order to incentivize insurance companies to be really statewide? And we're having those really fruitful conversations, Mike, in order to avoid potentially ending up in some situations like have happened in other states where their FAIR Plan is the biggest insurer in their state or one of the biggest insurers in their state. I got a question from a Republican senator last year when the legislation was working its way through at a committee hearing, and he asked me how many homes did I anticipate being in the FAIR Plan, and my response to him, Mike, was my ideal world is that we have 0 homes in the FAIR Plan. That we stand this product up. We stand up the FAIR Plan as a safety net, but we do things at the same time where we're increasing competition in the state, so that we do have a robust marketplace where people can find private insurance coverage. I don't think we're going to be there right off the bat. I'll be candid with you. I think it's going to take us some time to get to the place where we just have that safety net sitting there and we don't have homes in that safety net, but that's the goal.
Carole, tell us a little bit about what that insurance might look like and who might need it. You have said that this may be insurance you need, but it's not necessarily insurance you're going to want. It's not going to be cheap. It's not going to be like the Colorado option in health insurance, which is meant to be easily affordable for health insurance. This is not going to be the cheapest insurance out there. It may be the only insurance, but tell us how it will look in practice.
So I think what is a big challenge for the FAIR Plan Board, which we're appointed by Governor Polis, work very closely with the Division of Insurance. is that it's the commitment of the board to get this up and running by January 1st, 2025 and have it available to people. But it has always been the goal, and I think the goal of the legislature that passed it is that we want this to be an insurer of last resort, not an insurer of choice. And as you can imagine, standing it up for the first time, it is not funded by the state. It is funded by insurance companies in the marketplace to get it up and running. So we've already done an assessment. There will be another larger assessment. So as we're striking that delicate balance of making sure we're not pushing insurers out of the marketplace, we also need them to stay in the market, have confidence in the market, expand their coverage, because at the same time, they will ultimately be responsible for the FAIR Plan and the viability and solvency of the FAIR Plan. As we start selling policies next year, the hope is those, and not just hope, but statutorily, those are actuarially sound rates, so that the FAIR Plan itself can be self-sustaining. There won't be a large assessment after we have a catastrophe. The plan will be able to pay out claims that come to it. But these are all things that we know. Unfortunately, there's too many lessons learned from other states, like a Florida. What California is experiencing right now is they're seeing a huge expansion of their FAIR Plan, is that we really, as Commissioner Conway said, want to keep this as a pressure valve release for people who truly need it. Within the statute, you have to have 3 declinations from a private insurer in the admitted market to qualify for the FAIR Plan. There's also a cap of $750,000 for residential dwellings, cap of $5 million for commercial businesses. So we know that, again, they may even have to buy secondary wraparound coverage, as they have in other states for this. So the goal of the state, the goal of the FAIR Plan Board, really the goal of the insurance industry, is to help serve those consumers and be a niche in the market, not a panacea in the market, so we can help bring the state back. Be one element of the solution, not become part of the problem. So I think that's a big pill to swallow for, I know for insurance consumers, as they're just looking, I would like this to be a better option. Unfortunately, it needs to be actuarially sound. It has to meet those caps. And it really, you should be looking to the private market first. And this is truly an option of last resort. So again, there's going to be a huge education curve, not just with the consumers out there, but also the insurance agents, because you have to buy it through a licensed producer. So we're working really hard as a board, along with the state and Commissioner Conway's staff, to be educating in the runway we have up to this, to make sure people understand what the FAIR Plan is and what it isn't.
Doug, what would you tell Colorado to think about as it designs its FAIR Plan?
Yeah, I'm glad you asked the question that way, because I think that it's important, and I'll offer something that's a little bit, it's counter to what I think this discussion has gone, counter even to what a lot of folks around the country talk about when they talk about FAIR Plans, because I think the premise here of this discussion, and I think the thinking of the development of this FAIR Plan, but also in other states, is how do we use this as that pressure valve, that pressure release valve, and otherwise focus on incentivizing competition in the market, make sure that the insurance companies are going to be okay and feel comfortable with the marketplace. And I just don't think that that's the right way we make public policy. And I'd much rather us think, okay, how are we going to make sure that this plan, in an era in which getting insurance is becoming more and more difficult, the global reinsurance market that Carole talked about earlier is not going to become less pressurized itself anytime soon as climate risk expands and expands. So the question for me is not, okay, what do we do to make sure that Colorado has a more competitive market when the insurance industry is kind of possibly walking away? The question for me is, how do we make sure that insurance consumers have access to a quality and reasonably affordable, albeit actuarially sound, policy? And so I worry a little bit about the idea of being super niche, of being only, for the foothills and only available in certain communities, or only likely to show up in certain communities. And I think it's worth asking the question, how is insurance most effective, most successful? And we know that's by spreading risk. It's a pool. And so the idea of saying, okay, we're going to really only make this FAIR Plan structured so it's undesirable and really only available to the worst, most dangerous risks, ensures that it will be very expensive for people and will kind of create a downward spiral of availability rather than a relief valve. And so that's the concern I have. And I know that is counter the way the the policy flows, but I think it's worth keeping in mind. What risk are we putting Colorado homeowners at when we focus so much on ensuring that the competition in the private market is viable? I mean, these are companies that are saying, we're not going to sell certain consumers, or we're going to raise rates, or we're going to cut coverage dramatically. So why are we so focused on making sure that things are okay for those companies, rather than saying, let's make sure we have a really quality product for homeowners who can't get it? And so I just think that that's another way to think about this. At least should be part of the guiding thinking as everybody moves forward.
So before the other two jump in, I wanted to ask you, Doug, about a reader question that we got as we told people that this forum was coming up. And it goes to the question of pooled risk, but it cuts the other way on pooled risk, which is someone, say, who lives in suburban Douglas County, owns a $400,000 home, asking why their premium went up 40% to subsidize someone who owns $1 million second home in Evergreen or in Western El Paso County, to create the insurance pool risk for them. So how do you make sure that the pool isn't penalizing the people on the other side of the pool?
Yeah, well, it's a really important job of the Division of Insurance, and fortunately, Commissioner Conway and their staff, they work with the companies. They look at them to make sure that we're not having pricing that disproportionately, charges some people great deals when their risk is higher, in order to, and then makes other people with lower risk shoulder that. But that doesn't mean that we should be slicing and dicing it up so much that some people just can't get insurance at all, as long as they're living in a place that the state says it's okay to live. I mean, the problem here is that because we don't have this, we haven't done the important land use public policy work. And I think this is something that Carole and Mike and I probably all agree on, that we have a lot of work to do to make sure we are building safely and building in safe places. But that shouldn't be the job of the insurance companies. They're not our land use policymakers, but they've sort of become that because we don't have a full system. And this is not a Colorado thing. This is nationwide. But I think that it's important to understand that the purpose of insurance is not risk segmentation. That's something that is done to help make it fairer, but that's not the purpose. The purpose is to pool risk so people can afford to live in a home and have a fallback of an insurance coverage in case the tragic happens. And so I want to make sure that we don't find ourselves fighting against each other. We're in this together, but we do also have to expect that we are taking care of each other. And that means both as individuals, families, homeowners, but also as communities and the state and the federal government investing in risk reduction. And I think that this is something that both Mike and Carole started with, and I will emphasize all day long, which is we need to make our homes and communities safer. And that's going to take investment and partnership. And insurance companies should be giving us discounts when we make those investments in our homes, but we also have to partner up all segments of society to lower the risk, whether it's in Douglas County or up in the mountains.
Mike, do you want to jump in on that question of are there people on the board who are pushing to make the insurance plan more robust and more protective for consumers?
Mike, I'm going to go back to what Doug said before, because I just don't think it's dealing with I don't think it's an accurate description of where the market is and why and how the FAIR Plan operates within the market.
Okay.
Right. So I think it's important for folks to realize what Carole touched on before, the way that the FAIR Plan is funded. And in particular, folks, the way that a FAIR Plan would pay for claims. If we have a catastrophe, if we have a wildfire event that hits the FAIR Plan in a big, meaningful way, the FAIR Plan has to have a robust, sustainable private insurance market in order to get the funds in order to pay the claims that would result from that. So if we don't have, if we have a situation where the FAIR Plan is competing in a big way against the private insurance market and then drives private insurance companies out of the market as a result of that, it will mean that if that event happens, if that catastrophe happens, that we don't have the ability to actually pay claims. The FAIR Plan exists. The only way that it can function is if we have a good, robust private insurance market. So that's why we designed it the way that we did. We designed it to be very meaningful, that pressure relief valve, so that while we're adapting to the world, while we're finding ways to incentivize insurance companies to be more competitive throughout the entire state in order to bring down rates, we're ensuring that if the folks that are in that FAIR plan, right, if they have to be there, that they have protection, they have meaningful protection. So this isn't, we didn't build this, and I want to be very, very clear about this. Doug said that we built this in order to protect the insurance companies, or that's what he implied. That is absolutely not the case, folks. We built this we built this and we were forward looking. Like I said before, we were the first state in about 30 to 40 years to build a FAIR plan. And we did that because we were worried about Coloradans. We weren't worried about the insurance companies. We were worried about Coloradans and making sure that they would have the ability to have insurance coverage. It might not be the best insurance coverage out there, but at least having insurance coverage so that you can buy and sell homes is incredibly important, because it will have, if we don't have this, backstop, if we don't have this insurer of last resort set up, we will have communities. I guarantee you this. We would have communities in the state at some point in the very near future that would have a very difficult real estate market because they would have a very hard time buying and selling homes. So I can't push back on those statements enough, folks. We built this for you. We built this with Coloradans in mind in order to be able to protect you. As far as the question that you just asked, Mike, as to really how are we ensuring that risk is spread throughout our market? We've talked about...
Just as a reminder, Mike, let me just remind folks who are listening. The question was about from a reader saying, I don't have wildfire risk. I don't have $1 million second home. Why should my premium subsidize the pool for people who are worried about that? So yeah, sorry, go ahead.
Yep. So it is almost certainly the case that reader is part of the Hail Alley that Carole talked about. So they're almost certainly in a spot in the state that has had significant impacts from hail, or it's at risk of having significant impacts from hail. It's also the case that insurance companies do, right? They want to be competitive. So if they're writing in certain parts of the state that do have more wildfire risk, they will have underwriting guidelines that may make it so that, or that will likely make it so that those homeowners in those areas are, the easiest way to think about it, folks, are almost in some ways segmented off so that they're paying for the wildfire risk in their communities. For those of you that pay attention to the health insurance world, we have geographic rating areas within the health insurance world that really do kind of bifurcate the risk in certain ways and really bifurcate the cost, not so much the risk on health insurance, it's more the cost. But that happens throughout markets. But it's absolutely the case, folks, that we have catastrophes that hit Colorado. Really, wildfire and hail hit almost everywhere throughout the state. So it's going to be the case that you're subsidizing, and that's probably not the best way to say it. It's better to say it that you're spreading each other's risk and you're sharing each other's risk. And that's the core idea of insurance coverage, right? We want to, insurance markets, we want to make them as broad as we possibly can so that we are spreading risk and make it as affordable as we can.
If I could just briefly add onto that point, because I think people don't appreciate that hail risk in terms of dollar costs to the insurance system are much higher than wildfire risk. Wildfire is obviously so dramatic. Hailstorms sort of happen all the time. But if you look across the country, there's almost 10 times more hail and convective storm, big storm losses every year than there are wildfire losses. So it is important, exactly to the commissioner's point, that you are sharing your risk with others. We have to make sure that there is some fairness in that pricing, but we are sharing it because we all have different risks, and you're going to have and you want to appreciate the fact that there's somebody else in a different place that's putting money into the system as you are as well.
Carole,
Can
you
I
want to
just
jump in
follow
on any
up
of
on
that?
Mike?
Yeah.
So I absolutely agree with Doug on that. It's the hail situation here, as Commissioner Conway commented on, is that FAIR Plan is going to see a lot of hail risk come in. Multiple claims. We've heard from people with 8 claims in 2 years. So we know, or just conditions of policy. So I think that there is a thought process that this would be a fire-only policy FAIR Plan. It will not be. It will take in all those risks, unique construction, and we're still grappling with all of that. And that's where the big question of is how much business will be coming in, because it won't just be high wildfire risk. I have New Mexico, as I said. The biggest contributor to the FAIR Plan of the policies is hail risk, right now in New Mexico. We think that will grow with fire risk, but we very much need to be looking at ways to assist those people with multiple hail claims. We've talked about hail mitigation and programs where they could even be some type of cost sharing when it comes to hail resistive roofs, because we know that that is right now more than wildfire our biggest insured catastrophe. We've had more expensive insured hailstorms than we've had wildfires in the state, upwards of $2 billion. So, and they're more repetitive. We see them all the time. And this is also going to be a fair plan, unlike some fair plans across the country, that will see claims. They could be large catastrophic wildfire claims, and there is absolutely going to be, not if but when, large catastrophic hail claims as well. So that's something that I think we need to keep very in the top of our mind.
So, Carole, let me keep you on for a second to talk about something that came up in terms of discounts, incentives. We're used to, I think, when we sign up for insurance, getting incentives, especially in car insurance for, my kid gets A's in school. We have an alarm on our house. We have multiple policies with one place. Is there more room for, first of all, remind consumers how they can try to lower their insurance costs by checking some of these boxes with insurance companies, but also can insurance companies do more to create those kinds of incentives, especially in wildfire areas? Are they already doing this to say, if you have cleared brush, 30 feet or more away from your house, you qualify for checking that box? If you're not stacking firewood near your house, if you're creating a barrier of landscaping, can more be done?
So as we're talking about the risk pooling, but not looking at one higher risk and being subsidized by lower risk, this is where it becomes important for the individual homeowner, is you want to be able to do things that make yourself a better risk to your insurance company, that help lower your rates and make you a better insurance risk for them. And that's part of the process right now. Some companies do offer a discount for a hail resistive roof. When it comes to discounts, and we hear this many times, as you said, I also want a discount for my wildfire mitigation. Right now, we have been in a situation where we've had those discussions with the insurance commissioner, with legislators, where we don't want to disrupt the market. Insurance companies can't spread risk like they can in a place of California, where it's such a large space. So here in Colorado is, if you take all those scientifically proven steps to improve the risk of your property, which most insurance companies require in higher risk wildfire areas, that keeps you with a preferred insurer. That will keep your rates lower in the long run. Right now, there's not a specific discount for that. That is something where we feel at this point that it's important to be encouraging mitigation, important to be scaling that up within a community level. At this point, then putting on top of that already increasing premiums, increasing risk for the insurance company, increasing costs, to attach a specific discount to that isn't something that we're really supporting at this time. It has been part of the discussion, but certainly right now we're trying to continue to stabilize and not disrupt the Colorado marketplace.
Doug, do you want to jump in on that? Should there be more incentives? Should there be more discounts? And how can that be done?
Yeah, I mean, I think it's a really straightforward thing for your consumers, for homeowners. I'm investing in making the amount of risk we have at this home lower. So insurance company, who I'm paying to take on my risk, should charge me less for that, since I've reduced the risk. I mean, what instead the insurers are saying is, you and your communities and the state, taxpayers, you need to keep on spending money and money and money to lower the risk. And we're going to continue to raise premiums, and we're not going to pay attention to that investment that you made and that the taxpayers made in reducing risk. And that's why I think it's really essential that you craft rules that require insurance companies to give discounts when people demonstrably lower risk and communities make those investments, whether it's a hail-resistant roof or wildfire prevention or even home hardening kind of work. And I just think that we have to require that. This is not a kind of a traditional free market where people can just sort of choose not to buy the product if it gets too expensive, right? We are required, if we have a home loan, we are required to buy that insurance product. So there's a special obligation to make sure that the rules are there to protect us when we do what's right, when we make those investments, we should see the benefit, the return on those investments, rather than all that return on investment going to the insurance companies after we lower our risk. So I think that that's critically important. And I just wanted to very briefly say, in response to something earlier from Commissioner Conway, I was not suggesting that the FAIR Plan's construction was some a malignant idea to help the insurance companies. Not at all. I was just providing the perspective from the consumer advocacy community that we want to, as we develop a program, we make sure that it's developed in a way that doesn't, like some states have done, where they say the FAIR Plan has to be 10% more than the actuarially sound rate. Things like that to protect the competition in the market. And mine is not, it's absolute admiration for commissioners' work to develop the FAIR Plan and be forward-looking. I just want to make sure that we don't fall into a trap that some other states have fallen into, in which we prioritize market competition over consumer protection. I don't doubt that Commissioner Conway is going to be there to do that protection, but I want to make sure that it's part of the conversation.
Yeah, thanks, Doug.
Mike, let me ask you, could I just ask before we wrap up, we've got a couple minutes left, and I was partly in response to what Doug was saying, but is there more, besides helping to create the FAIR Plan, is there more of a role for the state government in Colorado in terms of making sure the insurance market, remains robust for consumers? Are there other things you are doing or are asking the legislature to do?
So I think, Mike, if folks have paid attention to the way that the division has approached problems during the Polis administration, let me say it that way, we very much get involved in the issues that are impacting Coloradans, and we tend to lead on those issues and to find solutions. So I do think that will be part of the conversation, and that we'll be having conversations with as we talked about before, we're having these stakeholder meetings where we're working towards trying to find the ideas that folks think will have a meaningful impact. I want to go back to the modeling point, though, that we just talked about a little bit, and the mitigation aspect of things and how that plays into the modeling, to be clear. So I think Doug's right in the sense that we have been, and when I say we, I mean we as an industry, the insurance companies, regulators, consumer advocates, the whole board have been telling consumers for decades that they need to mitigate their properties in order to make their properties more insurable and make the insurance that they're getting more affordable. But we've done, candidly, a terrible job of doing exactly what Doug just talked about, of really explaining to consumers and requiring transparency from both the insurance companies and the modeling firms about what the return on investment is going to be for people actually investing those dollars. We have to do a better job there, Mike. We've got to figure out ways to make sure that consumers, homeowners know exactly if they're going to spend $5,000, $10,000, if they're going to spend $100, what's the best way for them to spend that money in order to make their property more affordable, and in order to make that insurance more affordable and their property more insurable in the first place. We don't have that right now, and we have to fix that. And those are the types of solutions, Mike, back to the question that you asked, that I think will be at the forefront. We have to find ways to encourage fortifying roofs, right? There's on the hail front, hail for the most part impacts, on the homeowner side, impacts roofs. We know how to fortify roofs. We have to figure out how to pay for the fortification of those roofs. So are there interesting and innovative ways that we can make sure that we're doing that? And then I do firmly believe, folks, that we've got to find ways to encourage insurance companies to be more competitive around the state. If we do that, if we have multiple insurance companies writing in every corner of the state, they're going to compete against each other, and we're going to drive affordability through that mechanism too. So those are the things that are kind of top of mind for us right now, Mike, and those are going to be the things that we're talking about, and that we hope to hear different ideas from different stakeholders as we have our meetings throughout the summer and into the fall.
Okay, so we have to wrap up. So I'm going to ask each of you in turn to, again, address the consumer who we started talking about at the beginning of the conversation and kept mindful of them the whole time. I'm someone who just is getting my homeowner's insurance renewed, and I'm facing a 50, 60, maybe 75% increase. I'm an HOA that was paying $100,000 for the whole building in a mountain edge community last year, and my new premium offer is $300,000 or $500,000, and I'm facing a special assessment as a homeowner in that condo association. Carole Walker, what should I do? What resources do you have? What should that consumer do to educate, challenge, protest? What should they do?
So I do think it's important for us to rethink how we think about insurance too. For most of us, it's our largest asset. And it's always been just, I don't want to think about it because I don't want to think about the unthinkable. And it's a product I hope I never have to use. But now as more people are being forced because the escalating catastrophes to use that product, you need to be thinking of it, unfortunately, as part of how you're budgeting. But ways to bring it down, I always say, talk to your insurance professional about ways that I can bring those premiums down. What can I do to lower those rates? And at the same time, we all have to be working toward, as a larger marketplace, ways to stabilize it so insurance companies can bring down premiums. But it's not an overnight situation for either. But there are many resources available to the consumer out there. We have on our website is a consumer-facing website of ways to save, how to file a claim, all just consumer tips, as does the Division of Insurance. They have a whole toolkit that they've created both for homeowners and for condominium buildings and HOAs. So as we're in this crisis, I hope it pushes the conversation to come up with solutions that we haven't before. And as for the individual consumer out there, many resources that we can direct them through, both through this program as well.
Doug, I'm a panicked consumer. I've got a big bill. What should I do?
Well, first of all, you should shop around. One of the things that we've noticed over the years is that while right now premiums are going up across the board, but you may be seeing 50% from increase from your company, and there may be another company out there that will also write you a policy, and it may be higher than what you have now, but not nearly the increase that you're getting from your company. So before you cut coverage, before you reduce your protection, before you increase your deductible and do those other things that really mean you're taking on more risk yourself, go shop around, because people don't realize how surprisingly uncompetitive on a price basis insurance companies really are. You can find wild differences in the market. So I really urge people to do that. That's not going to solve everybody's problems, but it's definitely the first thing you should do. And so I encourage that. Also, we do have to invest in these mitigations, home hardening, and look to your companies, but also the Division of Insurance to find out what is the best way to go. What can you efficiently do to help reduce your risk? But then there are other things that affect price. One of the things that always bothers me and so many homeowners and drivers when they hear about it is your credit history is going to make a large difference in how much you pay. So if you happen to have if you don't have excellent credit, you may find that you're being charged a lot more simply because of your credit history, which is even more reason to go shop around. Not all companies use the same kind of credit history penalties. So especially for people with a moderate credit, you really need to go look for a company that's not going to be as aggressively penalizing you for that. So I really highlight the shopping, try to invest in the mitigation, but also let lawmakers know that you need them to help out and make sure that when you do those investments, there's protection through savings on your insurance bill, because otherwise we're not going to be able to do the real thing we have to do, which is lower our risk.
Mike Conway, people call your office. I call your office because I have a big new bill that I'm facing. What are you telling people to do?
Yep. So Carole touched on the toolkit. Folks, you can find that at doi.colorado.gov. It has all sorts of tips on there about different ideas and different components. If you have a complaint, you can file a complaint on our website as well. And I think that the shopping piece is key. It doesn't matter what line of insurance you're talking about. It's always good to go out and shop and see what types of different coverages and how different insurance companies may have more affordable products than any particular insurance company that you're with at the moment. But I think it's engagement, first and foremost, probably as well, Mike, that we need, right, as we're having these conversations over the summer, as we come out with whatever policy levers that we think can work to solve for these problems, solve for the affordability challenges that people are facing. I want to hear from folks, right? I want you to be in these stakeholder meetings. You can find the stakeholder meetings on our website as well. We've got a calendar on our website that will list out all of the stakeholder meetings once we get them up and running, and have them planned out for the summer. We're going to be doing a statewide tour where we're going to be talking about these issues in person with people as well. So it's engagement, but I think it's optimism too, Mike. So there was so much of this conversation today that felt like the solutions can't be found, and that, folks, I cannot stress enough. We are going to find the solutions for these problems. The market is turning to the reinsurance market is starting to soften. There's more capital coming into the reinsurance market. We're starting to see some hope there that we may see some level of relief in that part of the marketplace, and then that will transition through to the rest of the market too. But we're going to find solutions because we have to, right? We aren't at a sustainable place now, right? And we can't let this continue to get worse. So I think that's the most important thing from my vantage point, Mike, is that people are engaged and that they're optimistic that we're going to find solutions because we have to find those solutions.
Okay, good. Well, we'll end on some optimism. I appreciate that, and hope that people, but also individuals, have a responsibility to follow through, as Doug mentioned, as Carole mentioned, not just in finding out about their own insurance policies, but letting policymakers know what they want them to hear and what they need for their insurance and to be able to be responsible homeowners in Colorado. So thank you all for your expertise. Thank you to our sponsor, AAA, Carole Walker for the Rocky Mountain Insurance Information Association. Thank you. Doug Heller, Consumer Federation of America, thanks for your energy and your expertise on this. Mike Conway, Insurance Commissioner for Colorado, thank you for your time. And appreciate you all joining us and look forward to hearing more of your issues in the future. And send them to us at coloradosun.com. Thank you all.